to C&N Vantage Point. I'm Craig Morgenstern, Senior Investment Officer with C&N Wealth Management, and today's podcast will provide a market review for the month of February 2025 and our current outlook. Global markets were mixed for the month as transitional U.S. government policy clouded investor expectations, consumer sentiment, and U.S. corporate outlook. Recent announcements to impose tariffs on Canadian, Mexican, and Chinese trading partners are now seen as a negotiating platform. Other efforts to enhance government efficiency include the shuttering of the U.S. Agency for International Development, USAID. The latest Consumer Price Index, CPI report, placed the annual inflation rate at 3%, which was higher than expected and driven by shelter and energy price increases. This compares to the latest Core Personal Consumption Expenditures Index, PCE, reporting a drop-off in consumer spending. Amid U.S. fiscal uncertainty and elevated inflation readings, the Federal Reserve remains in wait-and-see mode given its current less restrictive monetary policy stance. Against this backdrop, U.S. companies continue to post their best earnings season in 3 years, supported by robust economic growth, improved manufacturing, and a resilient U.S. consumer. In particular, S&P 500 companies with significant international revenue exposure reported outsized earnings growth so far this earnings season. International and emerging market stocks led the way for the month, gaining 1.9% and 0.5% respectively, relative to U.S. stocks, which declined 1.9%. U.S. large-cap value stocks showed resilience relative to declines in U.S. mid- and small-cap stocks. The 10-year U.S. Treasury yield declined to 4.24% as intermediate bonds rallied. Gold surpassed the $2,900 level per ounce for the first time during a volatile trading month. Investors grappled with their first full month of new presidential leadership and witnessed a flurry of policy announcements and negotiating tactics. These changes will impact U.S. government's role on the economy, the U.S. consumer, and corporate outlook. On the surface, the imposition of tariffs can be viewed as inflationary and a reduced federal deficit and lower government spending as contractionary. A potential stagflationary environment would impose headwinds to U.S. equities, given their relatively full valuations. Indeed, the recent University of Michigan Consumer Sentiment Index declined materially on elevated inflation concerns, and the Atlanta Fed GDP Now tracker estimates GDP growth in Q1 2025 has declined 1.5%. We maintain a globally diversified portfolio and retain a slight quality and value tilt in equities alongside reasonable fixed income yields. U.S. companies posted their best earnings season in 3 years, and analysts forecasts EPS growth via margin expansion. The Federal Reserve will complement U.S. fiscal policy adjustments and is likely to maintain its key policy rate targets. Elevated yields support our cash and fixed income positioning as the curve normalizes in shape. We'd like to remind our listeners that market conditions can change quickly. As circumstances and facts change, C&N's market views and portfolio positioning may change accordingly. If you would like more information about our current positioning and market thoughts, please contact any of our wealth management advisors. And if you like this podcast, we'd be grateful if you would share it with your friends. On behalf of the entire C&N Wealth Management team, we thank you for listening.
Please note, views are subject to change based on market conditions and other factors. These views should not be construed as recommendation for any specific security or sector. Client portfolios may or may not be at the positionings discussed due to, but not limited to, distributions, tax management limitations, systematic purchases, etc. Some products are not FDIC insured or guaranteed, not a deposit or other obligation of the bank, not guaranteed by the bank, and are subject to investment risk, including the possible loss of principal amount invested, and are not insured by any other federal government agency.